So welcome again. Good morning, good evening, good afternoon, wherever you are based. We're delighted to have you. My name is Estelle Lahey, and welcome to this webinar. I work at CGAP and I lead our work on impact measurement and management. So today's discussion is really a key frontier in IMM, which is about measuring, understanding, and reporting the actual outcomes of financial inclusion investments. So in today's discussion, we aim to explore three key questions. What are the key enablers of and gaps in measuring and managing outcomes in financial inclusion investing? What can we learn from the experience of asset owners, asset managers, fund managers, and financial services providers? And what are the next steps to push the practice of measuring and managing outcomes? This discussion builds on CGAP's research, where we examined the current practices of different practitioners, impact fund managers, financial services providers, to see how much focus there is on outcomes in IMM today. So we'll start this session with a brief presentation to set the stage. We'll have a panel discussion, and then we'll open the floor for audience Q&A. To bring these insights to life, we're joined by a fantastic panel of great professionals. They bring each a very unique perspective from different parts of the capital value chain. We have Rachel Freeman from Time, which is a digital banking group offering financial services in South Africa and the Philippines. And Rachel will share Time's experience using outcomes data from customers and also experience engaging with investors. Tara Murphy-Ford from Global Partnerships, which is a nonprofit impact-first fund manager, will reflect on their experience in measuring and managing outcomes as part of their investment practice. And Adele Meer from IFC, so IFC acting both as a direct investor in financial services providers, but also making indirect investment via fund managers. It'll kind of discuss with you how IFC engages with fund managers on IMM and also with FSPs. And my colleague Charlie Clark is joining me to moderate this session with you today. Before we jump right into the topic, I just want to briefly share some logistical bits for the webinar. This is an audio broadcast, so we ask you to kindly keep your microphone muted, obviously except during the Q&A session. And if you want to ask a question during the Q&A, you can raise your hand to ask for the mic. You can also use the chat box to ask questions, which is on the right-hand side of the Zoom session, and you need to select all participants in the chat. And this webinar is recorded, and the recording will be emailed to all participants and registrants. So just some background. At CGAP, you are probably aware that we are advancing a sector-wide vision that focuses on outcomes beyond access and usage to really kind of try to focus on the fact that financial services actually improve people's lives. And this includes both short-term outcomes like financial health, financial resilience, and longer-term development outcomes such as women economic empowerment, climate adaptation, access to essential services. To support this, CGAP is strengthening the evidence base on how financial services contribute to outcomes. So really trying to shift the sector from assumptions to evidence-based decision-making. And in fact, yesterday, we launched a new online tool called the Impact Pathfinder, which provides the evidence on how financial services contribute to different development outcomes and intermediate outcomes. And so we're posting the link of this new platform in the chat and encourage you to check it out. As part of this critical vision of focusing on outcomes in financial services, we're also looking at aligning investments. We'd like to see that investments align with outcomes, so investments in financial services. And this is where IMM plays a key role. As we know, IMM is the strategy and process by which we identify and consider the positive and negative effects one's investment approaches have on people and the planet, and then figuring out ways to mitigate the negative and maximize the positive in alignment with one's goal. Last year, as I mentioned, CGAP took stock of existing practices of impact fund managers and FSPs to see how much focus there is on outcomes in IMM and potentially identify what could be done to push this outcomes focus further as part of our sector-wide vision on financial services and outcomes. What we found is that fund managers and financial services providers with mature organizational readiness to collect, interpret, and use outcomes data have innovated their IMM approach to be more outcomes orientated. This has been also enabled by different innovation in the ecosystem. For example, the work that 60 Decibels has done with their microfinance index and the client survey, or the work that Cerise SPTF has done with their outcome measurement framework, some of the work that other players like Impact Frontiers have also contributed to this innovation. Despite this progress, we also have found that the status quo remains largely to measure and manage for outputs, such as reach, access, and when outcomes are explicitly considered, the mainstream approach is to use proxies to estimate outcome performance. Why is this? Well, I think no surprise, but outputs are more straightforward, are quicker to measure than outcomes. This type of data is often immediately available in fund manager, in FSPs, management information systems. There's also a general sense that measuring and managing outcomes data is costly and time-consuming, that methodologies that rely heavily on self-reported perception data from customers are not trustworthy, especially when this data is not verified or triangulated. And while these challenges to adequately measuring and managing outcomes are valid, CGAP has also found in its research that asset owners, investors, fund managers, and FSPs lack a shared understanding of key strategic questions and elements needed for the effective design and implementation of IMM that truly focuses on outcome. So this begins with the specific purposes for which they need outcome data for. So we did this little exercise in our research, and we came up with these 4 potential objectives of why they might need outcome data for. So organization might need data to predict an outcome, to clarify and validate a new business model or a new product's impact potential, to monitor outcome performance to ensure that it's on track to being achieved, understand any potential negative outcomes that are emerging, and determine actions that needs to be taken to improve the outcome if needed, or to confirm definitively the outcome performance. And when you start thinking that way, each objective calls for a tailored approach to measurement and management. In some cases, one may rely on proxies, while others will require more direct measurement approaches to outcome. And with this type of thinking, we are starting to shift away from viewing outcome measurement as really a too difficult exercise to do of data collection that needs to be added on to your existing IMM system to primarily track access and reach, to a strategic making decision tool. So there is a critical opportunity to reflect and align on these key strategic questions to move forward with greater clarity and effectiveness. To advance IMM in a way that incorporates outcomes, we at CGAP have identified 4 key enablers that can help remove barriers and create the conditions for broader engagement. I'll briefly go over these 4 enablers, and you can learn more about them in our recent working paper, that will be dropped in the chat in a moment. So the first enabler is For stakeholder to be aligned, so that really outcomes are prioritized and implemented in IMM, there's a need to have really this shared understanding first on why we should focus on outcomes, and then when, how, by whom outcomes should be measured and managed, as well as who pays for the outcome evidence, such that it's useful for strategic making decisions. These are effectively use cases for outcome measurement and management, and the starting point would be the 4 objectives for using outcome data that I shared in the previous slide. So predict, test, and pilot, improve, and prove. And there are other structural, relational, and situational factors that would need to be unpacked because they will also influence the choices that are being made by fund managers, by DFIs, by FSPs in terms of measurement and management. Secondly, innovation is essential to overcome some of the current operational and methodological challenges in IMM. The digitization of financial services is enabling easier access to outcomes data. Technology is already offering solutions and could further support addressing some of these issues. So for example, using natural language processing, machine learning, integrated software platform, all of this could be used to share data sets or enlarge data sets and or have more direct engagement with end customers. But let's also be clear that the effectiveness of these technologies really depend on the use cases and how aligned they are. So they really need to respond to something quite strategic and useful. They're not they're a means to an end, not an end in itself. And there are also concerns around data privacy, protection, and cost. That all of that will need to be better understood, managed, assessed, etc. Thirdly, currently, outcomes data often lack strategic integration into key decision processes of asset owners, investors, fund managers, DFIs, and so there are opportunities to enhance that, starting with LPs, setting clearer expectations. There's opportunity to enhance the leadership of fund managers, of financial services providers. There's an opportunity to reinforce governance structure to ensure that all of this to ensure that outcomes data is more systematically integrated in key processes. So for example, in the investment process, ranging from screening, due diligence, monitoring. And finally, transparency plays a really important role in creating conditions for fund managers, asset owners, FSPs to engage more effectively with outcomes-focused IMM. And there is a range of things that could happen, from standardization of outcomes definition to refining impact reporting standards that would include presenting both positive and negative outcomes, strengthening the impact verification, improving and integrating existing data infrastructure for facilitating the analysis, the comparability, and the sharing of outcomes data. So here's a bit of context that I shared with you. So now let's move on to some more specifics and hear from our panelists and the audience. To hear from experience, and a reminder that you can already start posting questions in the chat if you haven't done so. And I'll hand it over to Charlie.
Thank you, Estelle. So we would first like to open up a poll for the audience to start with. Having listened to Estelle's summary of our recent paper outlining these 4 enablers for outcome-focused IMM, we would like to invite you to rank these in order of priority, and we'd like to then see where we end up as a community. In case you need any support on using Slido, use your phone to scan the QR code, and it should then follow on from a link from your phone, but post any questions if you run into trouble. we'll leave the Slido open for, well, we're generally about a minute is sufficient, but let's see. Oh, thank you, Sarah. You put that in the chat. So once we see a few more answers coming in, we have 74 of us today, so hopefully we can get quite a large number of votes in on this question, which is extremely useful. Then what we'd like to do is see if anybody in the audience would volunteer to give us an explainer on why they voted as they have. So if you'd be willing to, once you've considered your votes and you're ready to think about the next question, if you wouldn't mind just putting in the chat if you'd be willing to comment on your reasons for voting as such. Thank you, Amelia, to set us off. That's great.
You want me to go now or wait?
We won't bias the results just yet. We'll allow everyone to a few more seconds, and then for sure it'd be great to hear from you. Thanks, Amelia. All right, we'll leave that. We've had 31 votes. We'll leave it for 5 more seconds. You can see a bit more activity right now. Don't forget to post in the chat if you're happy to give us your view. And so far, quite an even range. Okay, well, we'll consider that a wrap. And Amelia, it would be great to hear from you first. Thank you.
Sure. I just want to say that although I agree with all of the constraints that we need to address, I do find that where there's a will, there's a way. So things like how to create the conditions or what innovations we need, no one's going to ask that until they're convinced of the use case. So that is why I would say that first. And that relates to the comment I put in the chat box earlier in the graphic that you had at the beginning, talking about the main reasons for this. You did not have the words reduce risk, but I find that to be the most compelling use case, is that if you're measuring outcomes, it's not just about, am I achieving the good that I want to achieve, but am I inadvertently harming anybody? And I need to know that in order to be financially sustainable and to be moral, to avoid that they lose money or that they become less safe because their data are not safe. So I think that's also related to this point of a use case.
Thank you, Amelia. And for sure, I would say we wholeheartedly agree with your position on that. And certainly in our paper, a diagram always uses summary language, but under the statement, the word outcomes, we of course then go into negative and positive outcomes, but absolutely hear your point on enhancing that even further for sure. Thank you. So Enabler 1, Enabler 3 came out as the second most frequently voted for. Would anybody like to comment on that? And then after one further comment, either that or otherwise, we'll move on to the next step of the webinar. No one is forthcoming just now, unless Sarah, you can see any hands up, which I can't right now. So happy to move on to our panel discussion.
Looks like we do have a comment, sorry, just in the chat. I don't know if you need to go back for a second.
Yeah, fantastic. And that's Xanatol. Thank you. It'd be great to hear your views. Thank you. Xanatol, if you'd introduce yourself really briefly.
Sure. Hi there. I'm Zanat from Agora. We're working on systemic impact through investing. This is really interesting, and I think the enabler 3, it sort of relates what Amelia was talking about. I think it's all about incentives. So at the end of the day, I think the LPs, GPs, and everybody in the chain needs to understand and ask for better results. And I think that plays a role in eventually making that a practice. And I think once the incentives are clear, everything else sort of follows through. The solutions will follow where the demand is coming from. So, I mean, I wasn't particularly clear. There were some linkages in the statement, but I think it's just important that everybody in the chain needs to see the value, either it's at a risk reduction point of view or creating additional value, and that will pull the others in. So that's just what I wanted to highlight. Over to you guys.
Thank you very much for that comment. Well, I imagine these two topics, amongst others, will come out in our panel discussion. So if we're happy to move on now to hear from our panelists. So at the top of the call, Estelle introduced at a high level our esteemed panelists today. We wanted to focus on both the systemic gaps and enablers and practical lessons in outcomes measurement and management, as well as a look to the future. So in this panel session, we'll invite each panelist to respond, obviously, from their perspective. And Estella introduced earlier, IFC is an LP and also a direct investor. Global Partnerships is our GP today, and Time as an FSP. But we note, of course, that they're not necessarily representative of all actors in the ecosystem. Well, if I might kick off then with Time and Global Partnerships for the first question. For your perspectives, Time being from product design and service delivery and Global Partnerships on allocating capital and other support, what role does outcomes measurement and management play in your decision making? Why and how? And please take a minute or so to describe what you do and as it relates to outcomes measurement and management.
So Charlie, do you want me to go or for Tara to speak?
You first, if that's all right. Thank you.
Okay, that's
Rachel.
good. And thank you to CGAP for inviting Time. Just because I'm not sure how many of you have heard of us. We are a digital banking group. We have our flagship operation, which is in South Africa with 11 million customers and a big SME book. We launched our second bank in the Philippines about 2.5 years ago. We're about almost at 6 million customers in the Philippines. We've launched our SME product into Indonesia and to Vietnam and are looking at banks there. And I'm actually speaking to you. I just landed into Jakarta. So you see my beautiful background of the hotel in Jakarta. So up until recently, I would have described Time as a startup. And we are mission-based. Our mission is to unlock human potential through providing financial services. And we run regulated financial institutions. So they're regulated banks. We've now kind of crossed just in the last couple of months into being what I would say a scale up. We had a major capital raise in December. So the period of time in which we've done a lot of outcome research is when we're quite a lean startup. And I think that's important for this conversation because, I think when Amelia was talking about, having like when there's a will, there's a way, there can be, but if you're a small impact driven financial institution with quite a high burn rate just to get off the ground, it's hard to do this. And so we're quite grateful. The way that we were able to do our outcome research is through kind of picking two clear partners to do this with and then sticking with them. So that's both CGAP and the Financial Alliance for Women. And we spent a lot of time doing case studies and doing joint research together where we are a data-driven institution. So we could actually have the data to enable CGAP or the Financial Alliance for Women to do really good research off of our data and test different models. And in that way, we were able to support outcome research even while we were and have always been very lean. In terms of some statistics, both banks have about 55% of our customers are women. In South Africa, 72% of our customers are low income, and about 28% of our customers live on $2 a day or less solely live off of social grants in South Africa. So we don't have the luxury with that type of client base to actually kind of do a lot of outcome or kind of even results measurement outside of what we can do ourselves unless we partner. And so we were able to create these very deep relationships and do the outcome research. We did find the outcome research to be incredibly useful. And the first one we did on our retail customers in South Africa, which was done by 60 decibels. Like halfway through the research, they called us and said, you have a big problem with the call center, and we're not going to wait to tell you. When we're doing our outcome research, that's a problem, and your customers you need to work on this immediately. So that's where we got a lot of great outcome research about the impact we're having, but it was also super tangible because they said, you have a business issue and let's solve that. And then recently we did this on the SME side as well. Also a lot of insights. Our SME product in South Africa is both through partners and through indirectly, and some of the research suggested we should just do direct and just do partnership-based lending, and which is what we're doing in the new markets across Asia. So we have found that our outcome research both provides us really good information about the impact we're having on the ground, which is important for us, as well as for our many impact shareholders, but it also drives business decisions. And I think when you look at outcome or the results measurement, if you're a for-profit institution that is focused in this area of impact, you're not going to have a lot of excess cash to be able to spend if it's not really helping the bottom line. And so that's where we really have worked hard to make sure that what we're doing enables both discussions, so that we can actually share with our shareholders what they're looking for, and actually so that they know that we're on target for what our joint goals are. But also, we also want, we're a profitable organization in South Africa. It took us a while to get there, and this part has to work in that field.
Could I jump in just there, Rachel? That's fantastic, and it seems to be a perfect segue to Tara talking from her perspective on the same question, in fact, as you were talking about fundraising and shareholders.
Well, wonderful, thank you. I'm happy to chime in, and thank you for the invitation to participate in this important conversation. So, as Estelle mentioned at the beginning, Global Partnerships is a nonprofit impact-first investment fund manager dedicated to expanding opportunity for people living in poverty. Since our launch in 1994, or our founding in 1994, and the launch of our first fund in 2005, we've managed 11 funds, and those funds are active across Latin America, Caribbean, and Sub-Saharan Africa. So we've done over 800 million in investments across 200 social enterprises. So what I'm going to share here today really comes from 30 years of experience in financial inclusion and 20 years of experience managing funds. And our impact-first approach, as well as our business and our operating model, our decision to be a nonprofit, really is rooted in what we've learned along the way. And how we perceive our job as an impact-first fund manager. And so really wanted to walk through how we hold that job and the role that outcomes has played in that. And really looking forward to the conversation more than anything. So as an impact-first fund manager, we see our job as really listening to and understanding the needs and experiences of people who live on dollars a day. More than half of the global population is still living under $5.50 per person per day, lacking access to basic goods and services. When it comes to financial inclusion, we're talking about those that still do not have access, those that have access, but are facing real barriers to successful utilization. Right? It's our job as an impact-first fund manager to understand which products and services are truly reaching and creating value for those customers, and we're talking about net value. So how we're thinking about the potential negative impacts as well as the positive impacts those products and services create in people's lives. When we take this approach, we understand that women and rural populations still remain disproportionately excluded, and that people are experiencing the impacts of climate change. Right?
And Tara, this is, sorry, go ahead. I was going to steer you possibly to zooming in, if you wouldn't mind, on the outcomes measurement and management. And certainly in the case study that we wrote in close participation with you, there was a whole wealth of outcomes measurement and management across your investment cycle. So would you be happy to dig in on a few elements for us?
Yeah, I want to make sure, as I do, Charlie, though, just naming kind of the role that outcomes play through our position in the market. So as an impact-first fund manager, we're zoning in on who do we aim to serve, what are the experiences and challenges, which are the products and services that are delivering outcomes in their lives, and why. Right, so that understanding of the outcome at the product and service level is critical to how we operate as a fund manager. We then need to understand the social enterprises bring patient and affordable capital to those that are really truly pushing to innovate, right, to scale positive outcomes for the populations that we aim to serve, right? And then it's our job as a fund manager to design the funds where the risk, return, and liquidity expectations are aligned with the outcomes that we're looking to enable and for whom. Delivering positive outcomes for middle-income consumers looks really different, right, than trying to reach underserved women who are managing and confronting climate change in remote locations, right? We just need to be more transparent and clear about that, and we can't do that without clarity on the outcomes and the inclusion profile of our investments, right? And through all of this, we're looking to bring and facilitate better flows of capital. I really appreciate Amelia's point. Like, we need incentives, right? And so our job as a fund manager is to align through the capital chain, all the way from the end customer through to the asset owner and back again. What does the capital need to look like to drive stronger outcomes for very vulnerable communities? I think we just named there's a sustained market failure when it comes to value creation on the edge of the market and financial inclusion. And the capital needs to look different if we want to solve that problem. Right. So for us, outcomes, and I would encourage folks to dive into the case study. There is a really kind of technical deep dive into how we do outcomes, but I really wanted to frame, Charlie, why. Why are we so focused on outcomes? Because there's a broader industry problem that we believe needs to be addressed.
Mm-hmm. That's fantastic. Thank you. I wonder if we might steer the questions now to you, Adele. And from your perspective, what are the most significant unanswered strategic or operational questions holding back progress on outcomes-focused IMM? And then why do these gaps persist, and how have they shaped IFC's approach or priorities?
Sure. Thank you, Charlie, and thank you to everyone on the call. So it's a pleasure to be part of this, and I hope it's the start of an ongoing conversation, because I think we're all struggling with the same thing, right? We all want to do good with the limited resources we have, but to be able to get more private capital and more resources towards impactful projects, we have to make the case that this is what results you get if you come in and partner with us on these individual sub-projects. If we don't have the evidence, it makes it much harder to mobilize that capital pool and channel it towards this particular direction. So let's start big picture. We all know the access to finance gap, as we've calculated it, is around 5.7 trillion. IFC on its own balance sheet does in the financial inclusion space, which is what I oversee. We have an active portfolio of around 17 billion working through financial institutions. Overall, it's close to 19 for the institution as a whole. So majority is through FIs and financial sector partnerships. It's spread over 416 clients, and on average, as of December, we've done over 580 sub-projects geared towards MSME finance. Each of our sub-projects directly, this is more direct exposure, have to have very strong impact measurement and monitoring frameworks in place, because our stakeholders require that. And it's something that we have to measure ourselves against in terms of, are we really saying the limited resources that we have dedicated to this massive problem is giving us the right impact in the right market, in the right portfolio segments? When we deal with fund managers, we can't lower that threshold. It has to at least be the same as what we're doing within our organization with our direct engagement with FSPs, and then maybe even more, because if we are channeling some of our money to be commingled with other money, and you tell us you have more of a local presence, you have a more dedicated team to look at certain slivers of underserved segments in the population, then we'd need to validate that. And so that's why the impact measurement piece is even more important over there. I think I agree with the comment made. It is partly risk management, right? For us, we've got to make sure especially as we're moving towards more data-based or digital financial services models that Rachel was talking about, is the risk of over-indebtedness, the risk of misuse of people's data, responsible lending practices, the validation of the use of proceeds, and all of that feeds into that impact framework. And so if you're not taking that into account, we are potentially subject to a lot of scrutiny and a lot of analysis around, are we doing more harm than good? And so there is that impact and risk assessment that goes hand in hand. The last thing I'll say is that outcome measurement is expensive. And for any fund manager or money manager or FSP, it's a balance they've got to run, right? Because they have profit and they have to be financially sustainable, and they've got to show a business model that allows them to compete in their local markets. And at the same time, they have to also raise more capital from investor groups like us. So I think there has to be a realistic approach as to what are the true costs of very intensive impact measurement and outcome focus. Data helps, and the amount of data that you can collect on your sub borrowers on a time series certainly enhances your ability to make that impact measurement easier. But then someone's got to collate that data and make some sense of that trend analysis. And it is a different perspective. And I think you've got to, in some cases, separate the teams that look at the business case and the origination, the typical portfolio monitoring, which relates to repayment capacity and ability to manage the underlying productive use of proceeds. And then a separate team that looks at, well, once we've done this in a particular segment, be it agri, be it gender, be it climate, what are we seeing sectorally? What has shifted? And what have we seen as a positive impact overall from these various interventions? I don't necessarily agree commingling it and having it part and parcel of every decision, be it on the repayment or the restructuring of a loan, and then adding the impact element is always that easy or helpful. So I'll stop here. Happy to dialogue more.
Thank you, Adele. What we'll do is if it's all right by everyone, we'll cover the questions that we thought would be useful in advance, and then if there's any follow-up from anyone, be it panel members or the participants, please let's come back to these questions during the Q&A in just about 5 minutes time. Well, if I might then continue with you, Adele, about putting you on in the hot seat, if you like. So could you give us an idea of any concrete actions or commitments that LPs can lead to advance outcomes-focused IMM across the value chain, and particularly how GPs and FSPs can support and collaborate and engage together?
No, I think, thanks, Charlie. Look, I mean, I sit on the board of one of our microfinance debt funds, and I think you've got to look at it from the perspective of, are we doing enough? And is there data that we can glean through from your existing operations that would help us? And then do we need some sort of local partnership models with local data collectors or survey companies that can provide us with a little more insight of what the situation is in the market after we've done this intervention? It's over and beyond what the fund manager's core responsibilities are in terms of showing us use of proceeds validation, following through with that investment thesis, which for us at least always has to have an impact focus, right? If it doesn't have an impact linkage, there's no way we would invest. But once we've committed to that investment and dispersed those funds to the fund manager, then the outcome is what we measure their success as a partner for us for future fundraising. And then there's, I think, the element that at least DFIs like us are faced more with is how do we then use our investment as a subordinated or a catalytic piece that really mobilizes private capital. And for the private capital, that impact piece gets less and less of a decision maker. It's more the financial returns piece. And you can have both. And in your particular LP GP conversations, you can build that capital stack to address what Tara was mentioning, that sometimes you need more patient capital, sometimes you need more working capital. And a fund manager can address the entire market needs by having a balance of products that go out there. Thanks.
Tara, would you like to respond to Adele's thoughts, particularly given conveniently we have you thinking about how GPs can work with LPs to advance concrete actions and commitments?
Yeah, and I appreciate, you know, as a fund manager, as an allocator, we really sit in a unique spot in the market because we're working with investors and donors, you know, as a nonprofit registered investment advisor. We're working with development financial institutions and multilateral banks. We're dealing with foundations, faith-based institutions, family offices. We have the opportunity to really understand what the market has appetite for. And Adele, I would challenge that I think we're seeing more private capital really interested in and wanting to value real outcomes that really move the needle for people who are underserved, but they're looking for product. And what they've been told is you can have your cake and eat it too, right? You can deliver great impact while also getting great returns. And that's true in certain markets for certain populations with certain outcomes. And that's we're going to need to think differently. And we're actually seeing private capital wanting that. What we're not seeing is enough actual fund design that's crowding that capital in. And that requires different capital providers to be thinking differently. And I really, Adele, appreciate the catalytic role that DFIs can play in crowding in that capital. But we need more transparency in the market if that's going to happen. We also need the mechanisms to be able to target social enterprises that are truly doing that work. And without visibility in the MIS systems to who they're truly serving, what is the poverty outreach of your customer? What are the outcomes that they're experiencing in their lives? And it's difficult for us to be able to bring that capital and say, we value in monetary terms the outcomes that you're creating for your constituents. And then accompanying those social enterprises and strengthening their capacity. So it's the capital needs to look different, but the partnership needs to look different too. In our 30 years of doing this work, we're seeing that our microfinance partners want to better understand their clients. They have an abundance of data, but they don't have great data or a clear understanding of what their clients need and what their journey is as they move through different products and services in their portfolio. So we have too much data, but not the right data. And that data has largely not been centered on the end customer, right? But that data alone needs to be triangulated with the data that lives in those MIS systems to get a broader holistic picture of what's happening. And so I also really appreciate Adele's point that this is about the cost of data, but it's about smart data. And then it's the cost of also building the capacities to discern that data and manage that data and drive different decisions. How do we want our products and services to look different? How do we need to be adapting them? How does this inform our product market strategy? How does this inform our growth and how we go to the market and ask for capital? We don't just want to grow. We want to grow into poorer segments. The economics look different. We need to equip our FSP partners with the data to help them have those conversations. So it's improved product and service design, and it's improved capital formation, right? And all of this, at the end of the day, if it's not driving us stronger outcomes for end clients, then we're not getting our job done, right? And so from our perspective, that flow and the measurement and the management, and I think we have made good progress. You know, we've been doing end client surveying with 60 decibels since 2018. Right, we've done over 50 assessments in our portfolio. We've talked to over 17,000 clients. We're a small nonprofit organization. For people who say this isn't possible, it is possible. Right, you can build the systems, but we need to be clear. The team that we have, Adele, is funded through philanthropy. Nobody is pricing this into the market. The management fee does not alone create the capacities for us to run this lab and optimize for impact and capital flows. Not yet. We'd like to get there.
I'm looking at time, and thank you so much to panelists so far for this extremely revealing and interesting discussion so far. Could I ask all three of you in maybe 45 seconds, if possible, to give us a sense of what you think success looks like for outcomes-focused IMM in 5 years' time. And then we will open up the questioning for the last 15 minutes or so to the audience. Could I start with Rachel, if possible? So what does success look like in outcomes IMM for you in 5 years' time? You're on mute, Rachel.
Yes, I think like when we look at this, we see the ability that we have to go very targeted in terms of data is amazing already. You know, we can do very targeted testing of clients in terms of any aspect of the financial services we provide. And that's by just the limited AI that we're doing, using of AI right now. In 5 years, we will be, you know, the banks will be fully built on AI, most likely, the new banks that we're going to be creating. And in that way, our ability to do extensive analytical work on outcomes and on the customer data is going to be even more amazing than we have right now. And I think that's going to change the discussion. That said, I don't see, like, you know, we were approached by many fintech groups that do kind of analyze ESG. And I think those groups, it's challenging still for someone like a regulated institution to work with them. So I don't see the angle of that going in there. I think it's got to be the institutions themselves using the AI to drive better data and data analytics in this area.
Thank you, Rachel. And Tara, could I ask you to go next? 5 years' time, success and outcomes, IMM.
Well, starting for my constituents, I hope we're optimizing for impact. You know, I hope we're really using data to drive decision making. I think that's going to lead to more product innovation. It's going to lead to more scale in the market of the products and services that are really addressing the dynamic needs of those that still lack access to financial services, and those that are struggling with utilization in ways that really leads to financial health. So I think the data piece of this needs to come along, and I absolutely agree with Rachel. I think the capacity, it really is in the triangulation. We hold the GPS of impact, that everybody wants that one data point, when in reality, the precision gets sharper and sharper when we know how to triangulate between different data sources to approximate the impact that can be achieved. So strengthening the data, but also getting smarter with the data. And I think building the mechanisms to have data actually drive decision making, which I would challenge everyone here who has capacity when it comes to how capital flows. Are we ready to use this data to behave differently? Right. And so really thinking about how we're going, this data is going to drive decision making, I think is going to be really critical, because if we have the capacity and we have the data, but it's not changing how we operate, then we won't have been successful.
Thank you, Tara. And Adele, briefly to you, if you wouldn't mind, and we'll open it up to the audience for 10 minutes.
Look, I'm going to be a little more controversial. I agree with data. I think data is great. If we get it, let's point it in the right direction. Let's make good decisions based on data. But I think DFI money, channeling foreign capital towards highly impactful projects offshore, that's a drop in the bucket. What we've got to come up with is a very clear idea of what is a particular need in a particular country, and channel a lot of that local currency, institutional money that is currently parked in government paper, and channel it for the right sectors, and show why it makes sense both financially, why it makes sense from an impact perspective, who are the end beneficiaries going to be, and link that and bring that in to the equation, rather than just constantly trying to get, you know, DFIs of all communities coming in together and buying into an idea, and then 5 years later showing them this is what we did with your money, but the underlying problem still exists. And I think that's when the real shift is going to occur in terms of getting the right level of capital towards the right problems that are persistent and existing. So certainly data helps. We should continue doing case studies. We should still spend money on enhancing operational capacity. but we've got to move capital at a much larger level inside many of these economies rather than constantly looking outside. Thanks.
Thank you, Adele. What we'd like to do now is open it up for Q&A. I've been incorrect. We still need a minute or two at the end for Estelle to wrap us up. So we have approximately 6 minutes, I would estimate. I've been busy responding to people in the chat, but I hope that doesn't mean you feel that you can't continue to ask the questions. So any hands up or any any interest to pose a question, please go ahead just now. Estelle, can you see the hands up? Unfortunately, I can't see them. There are any.
I can't see anything, Charlie. So I know Xanatu had a question about systemic impact in the case of over-indebtedness in Cambodia, as an example of, you know, when it's not a firm level, but more like a at the system level type of outcome. And the question was, how do we incentivize investors and investee to act in such cases of more like systemic impact? So I don't know if Tara or Rachel have a view on that as investors and providers.
I think my reflection, and I appreciate the question, and even just listening to this conversation, you can hear how each of us is kind of operating at different points in the value chain and thinking about like what role can we be given where we sit, what do we need to be working on, right? And so, you know, Adele, I really appreciate that, like systemically, right? Like we need to be moving and addressing the underlying systemic issues, right? And in concert, what can we be learning from those that are in the lab day in and day out experiencing those systemic issues, right? Because the solutions need to drive to better operating conditions for entities like Time or like global partnerships, who I believe have a role to play, right? And so when we think about how do we create the right set of incentives at each rung of the value chain on capital, and how do we make sure that the end client remains the focus? And I don't think we can do that if we don't have outcome data, be it imperfect. I know there's a question in the chat. This is self-reported outcome data. Our learning is that self-reported outcome data becomes more useful when you triangulate it within a broader data set. Your understanding of the macro conditions that are highly contextual, right? Your understanding of how they've moved through the product and service offering of the institution. And so I believe each of us from our respective positions in the market can be pushing on. And I think the invitation with this webinar is let's make sure it's not happening without clear line of sight to who we aim to serve and the types of outcomes we're looking to enable in their lives. And if we don't have any data, and if we don't have any capacity to use that data, then we can't be pushing from our respective locations.
Thank you, Tara. I'm going to take us back to Amelia's initial question, actually, which was as we were still going through the panel discussions. And it was a question about what Adele said about the expense of outcome measurement. Amelia, would you let us know if you feel like your question's been answered or if you have anything?
Hasn't, but I'll be brief. I know I have 30 seconds, so I promise to be brief. What I wanted to say, and then hear the reaction, that's why it's a comment and a question, is I don't think at the very basic level it has to be expensive. So I think the more you can invest in it, obviously the more insight that you can get. But we know of institutions that have a very simple, if they already have a mechanism with which they're interacting with their clients, they can insert into that, like if it's a monthly questionnaire on a sample of customers, or when they come for an application for a loan, or if it's a customer satisfaction survey, if you say, have you experienced any challenges using our products and services? An open-ended question, even with 20 people, you will get insights, like what our friend from Time was saying about the call center's not working. It would have come up in the first 20 people. So I don't think that getting very basic information, especially related to customer harm and customer negative outcomes, has to be expensive. So I don't think that's an excuse not to get some outcomes data. That's what I wanted to say, but I'm curious what the panelists think.
Yeah, I mean, I'll take that, because I think when you're a startup and you are raising money, and we did not have like we're not a donor darling. Okay, we struggled every time. Our founder spent 5 years raising money. That was his sole job. Okay, so it's not like we got lucky in December, but before that, we struggled nonstop for the funding that we had. And it seems easy, like, oh, just put in the app a question like that. However, and we're constantly being asked, like, oh, why don't you serve these like foreigners in South Africa? Why aren't you serving these different people? And every time you add something in, you take up, and specifically in South Africa, data. So the cost of data is so high in South Africa for users. And if you think that some of our 28% of our customers live on $2 a day or less, we have to be so lean in the app to be able to serve them so that we're not draining their data or the bandwidth that they have, that they buy, if they don't, when they buy prepaid. So everything that we think about is how do you provide the service as lean as possible, and what can you get? So rather than like we get lots of data coming through, and we use a lot of emphasis on net promoter scores. If we are, if something happens immediately, on social media, people aren't happy, it's all out on social media. You don't even need that. You can just get it on social media. It's just figuring out how to respond and keep this so that you're not adding, like, in the Philippines, as an example, there are no national IDs. The IDs that people have don't have gender on them. So if we build in another step in the process for gender, it means it adds time that people have to use. So how do you get the gender data, but not make it heavy for people to actually use the financial services? Those are the things that we spend time with our engineers, figuring out the flow through to make it so easy to get the data that we need, because gender data is super important for us. Because of our business model, we know that more women are always going to use us. And so we need to know that gender data. But when you don't have national ID like South Africa or Indonesia or Vietnam, and you have to figure out that, and you don't want to be asking lots of questions about these, how do you structure that? How do you use algorithms? How do you do this as lean as possible to get the data so that you could actually think, what are the best products and services, and design those? That's what we spend the most amount of time thinking, is to keep the products, to keep ours being the low cost option for the Philippines and for South Africa, to how do you do this in this amount of space that you have to work in. And
Rachel, I don't want to cut you off, I'm sorry, but unfortunately I now have to cut you off, just as we're getting into some real meat of the issue. There's a theme emerging on who pays, and we certainly look to that in future discussions, I think. But I think it's time to hand over to Estelle for a brief sum up and way forward. But I'm sorry to cut you off, Rachel.
Yeah, sorry. This is really, I guess, a starting conversation for us. I think we hope that there'll be many more as we kind of try to advance the thinking and the practice with CGAP and others. I know Cerise SPTF is here as well, and I think it's great. And so we also seek to collaborate across the industry, and there's a hot button issue around costs and the affordability of IMM and collecting and outcome data and who pays even for that. I think this is some of the things that we hope to also bring clarity through the work. So I'll skip everything just to basically end and really thank everybody, the panelists, for your contribution and insights today. I just want to say that, just building on the poll and the presentation, CGAP has decided to start some new work related to the first enabler that we presented. So basically around those use cases that we see is really as an important foundation to really bring clarity and kind of have this kind of strategic reflections on why do we need outcomes data for what objectives, going back to some of the slide that I shared with you earlier, and then kind of thinking about then what do you need to measure, when, how, who, when, who pays, And who does? I think these are really fundamental questions that I think are still remain fuzzy today, and that we think will bring some clarity. So we want to develop collaboratively with asset owners, fund managers, FSPs, ecosystem players like Cerise SPTF, these use cases through a process of research and collaboration over the next couple of years. If you are really interested in stay engaging, learning more about our work and see how you can also help with the work, I would really encourage you to get in touch with Charlie and myself. Our emails are going to be in the chat box. And as I said, this is really the first conversation, and we'll talk more over the next few months about IMM and bring different perspectives like today. So I really want to thank everybody. Thank you to Rachel, Tara, and Adele, and all of you for your questions. Sorry, there's not enough time, but we'll speak again soon. Enjoy the rest of your day or evening. Bye, everyone.
Thank you.
Thank you, and bye-bye.